Good morning, Jason Best, co-founder and principal at Crowdfund Capital Advisors. Thank you for joining us on the sidelines of SC by SC, Synergy and Crowdfunding Forum to record this segment of the conversations at SC. Welcome to Malaysia. Welcome to Kuala Lumpur once again, Jason.
Great to be here. Thank you very much for having me.
I understand just before making your way around here, you've been fairly engaged and extremely busy with your schedule with various regulators across this region, engaging on this new phenomenon called crowdfunding. Could you just perhaps give us a broad sweep of what is happening in the region, what other regulators are doing, what are their perspectives, concerns, views, as it were, with regards to crowdfunding, and how are they taking on this new phenomenon?
It's been fascinating. A year ago, when we first met, I think in most countries, really globally, and definitely in the region, the question was, what is crowdfunding? 1 year later, the question is much more commonly, how do I implement it effectively to stimulate SME growth, to stimulate job creation, and to support entrepreneurs and SMEs? So I think we've made a lot of progress in this last year. Specifically in the region, there are several regulators that we have worked with and met with now that are at various stages of the process of either exploring or implementing. I think that it seems that the SC here is moving very efficiently in their process, and I think that we'll see how those the finalization of your process occurs. But it seems that I think not long after your process completes that there'll be other countries in the region that will have similar frameworks. I think that we see that it's sort of structured similarly, where it's like, how do we regulate how do we provide structure for investors? How do we provide structure for issuers? How do we provide structure for the platforms, the crowdfunding platforms themselves? And so I think those are all kind of the areas that we see. So certainly a lot of development.
It's really great to know that that is kind of a tsunami, as it were, of early adopters for this phenomena. So how does that kind of contrast with what you've seen here, especially in the recent past, where we've just put out a consultation paper as to how we wish to tackle a regulatory framework? Do you see any great contrast that you wish to flesh out for us to take on with regards to their thoughts and perspectives?
I think there's always a lot of conversation around a few points. One is, what is the level that we allow retail investors to invest? Like, how much is the right amount of money to limit the retail investor to allow them to participate in the market meaningfully, but then also not feel like they are overly restricted. So one of the other issues we've seen in several conversations with other regulators is around this concept of an educationally accredited investor. One that says, here's the level that every retail investor can participate in, and then if you pass a simple exam, a short test, that really the test is not a full day sitting. It's basically, do you understand portfolio? Do you understand risk? Do you understand diversification? Do you understand these are high risk assets? Those sorts of things. It allows that investor to put a larger amount of money to work. And sometimes the regulators are thinking about 2 to 4 times the amount of money that the regular retail investor could be able to put to work in crowdfunding. So I think that's an interesting area of debate. Another area of debate we see is the ability to crowdfund a fund, which I think is interesting because one of the biggest challenges is making sure that the retail investor understands that this should be a diversified play, small amounts in lots of companies. And so does a fund that's focused on this space allow for some forced diversification that helps the retail investor in the end?
Crowdfunding has been very much called small change investing, and we've seen a lot of predictions around the kind of figures that the rest of the world will achieve, with a figure of 95 billion appearing in the horizon within the next 10 to 20 years. So do you really see these figures coming along? And is the promise of and prospects of Asia crystallizing this phenomenal growth really there, given your interaction with the regulators as you see it?
Yeah, I mean, I'm not a regulator, I'm not a lawyer, I'm not an accountant, but I'm an entrepreneur by my background, and so I'm naturally optimistic. And so I do believe that we will reach those numbers, because the example I would give is what we've seen in the US. So a year ago, the US market began to allow accredited investor crowdfunding. And at that time, the professional investors said no one would ever make investments in this, it wouldn't work, it wouldn't be effective. And at that point, the very beginning, you saw investments, the rounds of investment were being $250,000 to $500,000 US. 12 months later, we're seeing commonly the rounds are over $1 million US, and many times between 2 and 10 million US dollars. So a significant growth in the size of the rounds and the amount of money, the frequency that the money is successfully being raised. So I think that that is a good sign that as the market may begin small and it may begin in a limited fashion, but over the course of 1 to 2 years, especially with some good, a handful of success stories, that market will accumulate, will grow. And I think that what we've seen obviously in other parts of our digital lives, that as people become accustomed to and comfortable with transacting online and engaging online in new ways, that tends to become a very steep ramp as far as the amount of time and energy and investment that could take place there.
With regards to other markets that have gone way ahead, the UK, US, New Zealand, they were prime movers in this space. And from developments thus far and where Malaysia is coming from, what do you think we can learn as we seek to adopt this phenomenon of crowdfunding and putting out a regulatory framework, as it were? And what are the best practices and pitfalls that we can really avoid learning from these markets that have gone way ahead in the last 3 to 5 years?
I think I want to give full respect to the UK market for moving ahead so completely, and obviously the Australian market, that's where they've been the longest running crowdfunding platform in the world for 8 years, the Australian Small Scale Offering Board. The US really is lagging behind those other two markets pretty significantly. I think that in the UK market, the reason why that market has moved forward, I think so effectively, is that the regulator took a proactive stance. And the industry took a proactive stance. The industry went to the FSA and they said, we would like to be able to do crowdfunding. Here's how we'd like to do it. Here's how we're going to report to you. Here's how we want to engage with you in a transparent way. And the regulator, instead of saying no, said, okay, we're going to watch you closely. We're going to make this work. And over the course of these 3 years, they've built a very successful model. The data from Cambridge and Nesta in the UK demonstrates they've delivered about £500 million British pounds to over 5,000 businesses over the 3 years. So it's a substantial amount of capital. And so I think that there's a model there that is replicable, that says if there is a good communication with the industry and a good collaboration with the industry, that you can build a strong market. I think that something that helps that, something we certainly advocate in the markets that we work in, is the creation of, and this would be that the industry would do this, but that the SE could support this in a soft way, the creation of a crowdfunding association, one in which, so that the regulator has a single voice to communicate with in the industry, and that it also allows that those organizations that are legitimate platforms, crowdfunding platforms, can join that organization and be certified and collaborate. I mean, I think that what we've seen in other markets is that even though there's fierce competition, there's certainly a desire to see this market succeed. And so that we've seen that there are, that these players or these competitors are willing to work together to the extent, because the market opportunity is so large, that they understand by working together they can grow the size of the pie.
That's great. Taking off from the point that you just made as to the success being very much driven by the market and that having a better outcome, as it were, can I go back to your specific home base, which is the US, where much of this come from, and as one can see, is probably more government-led. What would you like to see after so many years, having been a protagonist, as it were, in this front, that you would like to see coming out in terms of it gathering a bit more pace from the United States with regards to this phenomena?
Well, the proposed rules we've seen for crowdfunding for retail investors were very heavy. Some consider them onerous on both the companies and the platforms and the investors. So if we could, over time, I think we'll see two things. I think we'll see that the rules will come out. I think they will be very restrictive. We will see to what extent the market is able to digest those rules and to utilize them to grow the market. But I do think that over time, the legislature, our House and Senate, will propose updates to our Jobs Act. And I think those updates will allow for the companies to raise more money. I think they will also be very specific in directing our Securities and Exchange Commission about how they need to become less restrictive, how they should provide safe harbor protection from liability in certain cases to the platforms, how they should require more moderate accounting standards for small startups and small businesses, and how they allow the certification process to take place so that it can be done in a more technology-focused way. The other thing that I think, though, that this regulation will drive is it'll drive innovation in the financial markets. And I think that's one of the most interesting things about this whole evolution of finance for me, is the fact that we're going to see innovation that's created that will be effective in helping crowdfunding become more useful and let that market scale. And I think that angel investors and VCs and others will look at those innovations, and there may be some of them that they can incorporate into their models. Because frankly, the way those businesses have been run, it hasn't changed a lot in the last 20 years.
Thank you for that, which leads me very interestingly to the point that I wanted to pick up with you, and that is this tension, as it were, between venture capitalists and man on the street investing. We picked up some of these points from yesterday's discussion at the forum, whereby on one end we see the venture capitalists investing, and they having their current model, as it were, and there with small pocket change investing coming on the other front through the crowdfunding platforms. And we do see at some point the two does converge, and the panel speakers had offered some perspectives on that as well. Can you perhaps illuminate it for a little bit more for us, whereby perhaps the twins shall meet and meet in a more seamless manner and make the whole experience of crowdfunding to be more meaningful for both these two ends of the spectrum, as it were? Jason.
It's typically difficult for entrenched market actors in an existing market to see new ways of doing the things that they do. It's just inherent in human nature. And so what we've seen in other markets, and I believe we'll see everywhere, is traditional investors are concerned, nervous, afraid, worried about new entrants to the market. And there are many things that they can say about that. But what we've seen in the UK and what we've seen in the US is that over the course of a short period of time, 1 to 2 years, that these entrenched market interests began to do two things. First, the markets begin to hybridize. The markets begin to, those ways of doing business come together. So there's the Business Angel Network in the UK, the woman who runs that organization, her name is Jenny Tooth, met with her on a couple of occasions, a very bright woman who saw crowdfunding early in the UK, began meeting with the platforms, understood the opportunity, and helped the business angels in the UK see this as an opportunity for deal flow, see this as an opportunity for due diligence, and see this as an opportunity to find new business angels. In a market where you're trying to increase the number of angel investors, there are a couple of things that can be helpful. One, making more people aware that you can become a business angel, and then increasing the number of opportunities you have to write checks to those companies, and potentially at smaller check sizes to begin experimenting early. And so by having a crowdfunding platform, by making the transactions more transparent, by allowing people to make different sizes of investments, it creates more deal flow, more successful investments, and more case studies for how being a business angel can be both beneficial to the country and financially beneficial to the person themselves. So I think that we will see that. We've already also seen that in the US. 2 years ago, I spoke at the Angel Capital Association event in the US. And the room was fairly hostile to crowdfunding. And 2 years later, we're having very different conversations with angel investors in the US about how this can be, how they're utilizing crowdfunding.
It's great to see the system kind of come together after the gestation period is over, as it were, where the conversion has taken place and people see it as a more friendly and useful mechanism for the way in which they used to operate. And taking off from there, I would like to speak to another segment of the capital market, which will be the boutique advisors and the corporate finance firms, who traditionally had a much bigger say or bigger piece of the action, as it were, in terms of nurturing and curating companies and getting themselves ready for capital raising through whatever avenues, be it on the domestic market as well as on the international market where it avails them. So speaking to this point and just checking on the registration that we had and attendance from yesterday's forum, it didn't seem apparent to me that some of these firms are coming on board yet. What do you have to say with regards to such service providers, and where do you see the conversion taking place, and what kind of messages that we possibly can put out to them to speak to them that really this is a space, a new space as it were, that they can really come on board and also make a difference to where their old business models are coming from?
What we've seen in other markets, obviously every market is different, and so it's hard to really generalize, but I think that I can just give you experience from other places. Until the regulation is finalized and approved and available, what we've seen are professional investors take a wait-and-see attitude to these new market opportunities. Because there's a sense has been a sense in other markets that, well, the regulator's thinking about it. It may be months or years before it actually happens. And so, but once those new tools, those new market opportunities are actually finalized and available in the market, then you see professional investors taking a very serious look and begin to look at their opportunities. And I think that this presents a whole new market opportunity for boutique advisors. Now, they will have to create new product sets, scoping new opportunities for themselves, but an opportunity to really create a new set of products and services that they can offer to companies that are raising money through crowdfunding, both on preparing for those campaigns, executing the campaigns, supporting them as they communicate with their investors. And then also, it's deal flow for those boutique investors, boutique firms, to then go out for larger rounds with venture capital or private equity or international capital. So because the entrepreneurs are going, and the small business owners are going to trust the people that were there for them at the beginning. And if you can build those relationships early, you can build a long-standing relationships with successful companies.
Yeah, thank you for that point. I'm sure certainly that will be something that we will be taking to the market as we roll out our initiative along this particular front. So next, I would just like to move on to the question of asset class, and you will be particularly familiar that in Asia that we are particularly hot on real estate. So taking the point from the fact that this is a real asset class that speaks very much and resonates with the Asian investment class, what do you see as a potential discussion point, as it were, with regards to putting real estate investment through crowdfunding platforms and in various forms and instruments, as it were? Will there be concerns by regulators with regards to asset bubbles appearing along these lines? And this is a really new space, and I'm sure you have seen some of this being done in the more developed markets, out the UK or the US, as it were. What do you have to offer us in terms of your views going forward? Because I'm sure this phenomena will be something that we will have to take on and wrestle with in the days ahead, even as we roll out this crowdfunding initiative.
So with real estate, it is probably the fastest moving segment in the US crowdfunding space. I think it's because it's an asset-backed security. People believe they understand real estate. My experience has been fewer people actually understand real estate than believe they understand real estate. And so, I think that the challenge for the regulator and the challenge for the industry, more importantly, is making sure that the products that the platforms are putting on their platforms are really carefully described. What we're seeing in some cases with platforms in other markets that may not be as careful as they should be are using words like guaranteed because it's asset-backed, or that it is assured, or no risk, or those sorts of things. And many times they're selling products that may sit in second or third position in scope. You want to make sure that there's an understanding, that the platforms have an understanding of how to adequately describe those asset-backed securities. Is it a mezzanine debt? Is it a bond, mezzanine bond? Is it a primary or secondary? What are what is the asset coverage on those instruments? And so that people really have a good sense of it, because there's no guarantees in anything in life, right? And so because that's where you get the froth, is when people start to believe that there's no risk and it's free money. So I think that if you do if the platforms and the companies do a good job of managing that, and the regulators able to watch that happen and make sure that is conforming, then I think there is less risk of an asset bubble. But I think this all goes back to the need for data, and the need for there to be a standard set of data that every crowdfunding platform is able to easily provide in an automated way to the regulator. I think it's important, as I speak to the crowdfunding platforms, that we talk about this with them also, that if you have an API, a digital connection between the platform and the regulator, and that data moves in an automated fashion with no additional work. Once the connection is set up, it moves on a quarterly basis. It allows for that transparency to take place that will allow the regulator to understand what's happening. It will provide more transparency for the platforms, which will increase investor confidence and SME confidence in using this channel.
So Jason, thank you once again for joining us at Conversation at SC.
Thanks for having me.
Thank you.
Thank you.